Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this Trade Ideas video, I'm going to take a look at an Adobe trade that was announced on July 24th for my insider members. So the purpose of this is to show an example of the re-entry buy setup and the power of an options trade like this. So stay tuned. All right, so we're going to start off here, and this is back. I'm looking at July, August, primarily July here of this year, 2016. And so Adobe started to trend above the 10 exponential moving average. This is my 10, this is my 21 simple, and my 55-day simple. So the 10 broke above 21, so we got a short-term moving trend in this direction. And then we get a sharp pullback with a close below the 10-day moving average. Then we come back above it. I was looking for an entry at the break of this high. I really thought this was going to go, and I actually thought that this was starting to set up some kind of a continuation head and shoulders pattern. Anyway, we had this trend line across these highs in here. So we were looking for an entry at 98.44. Okay, and you can see the high here was 98.425, and we didn't get that entry until on July 28th. So here's day one that we got in, and we got the August 97.5 calls. So here's the strike price, so we were slightly in the money. So unfortunately, then we had to sit back through a little downturn, a little pullback. So what was my stop? I was being a little loose with my stop. I had consecutive closes less than the 10 exponential moving average, okay? So what does that mean? That means I have to have two closes below that blue line and then a break of that 2-day sequence for me to be stopped out. What I'm trying to do is allow a little more room for this volatility, which is exactly what happened, and that's the way it worked out. So if we move forward here a little bit, you can see we had the dip and we came back up. Where was my target? I had set a target at 101.52, so up in here. So now we're starting to trend. Looks like we're breaking the trend line. Looks like we're moving up. And on the 11th, August 11th, the target is hit. I sold the entire position because we were hitting the top of the Keltner channel for one reason. And then the second reason was the ADX was it was 13 here, it was 12 here, and it just turned 15. So the ADX was not indicating a strong trend as of yet. So I decided to go ahead and exit and grab the entire profit here. Sold to close those two 97.5 calls. And again, I use two as an example. Sometimes what I'll do is sell half, sell half and hold the other half, let the other half run. I'm using two just purely as an example for my insider members. It's purely up to them to decide based on their trading account, their risk tolerance, everything. Is this, number one, something that they want to do? And number two, do they do 2? Do they do 4? Do they do 10? Whatever. But for trading account purposes, I'm setting up the trade like this. So here we are. We hit the target. We exit at $3.95. That's $1.69 a contract, so $169 a contract, up 74.8% in 11 trading days. So you can see the power of the option trade, and yes, we had a little bit of risk. We had to sit back down through, a little drawdown, but then it continued in the direction that I expected to be in. All right, I hope you found that helpful. If you did, please hit the like button and share the video on your social media, and you can actually just copy the link and send it in an email if you want. And if you're not watching this on my website, which you're not because you're on YouTube, head on over to the website, check out the posts and the membership I've got for you. All right, everyone, have a great rest of the day. Talk to you on the next video.